Welcome, everybody. Come on in, join us. It's so good to see all of you. Welcome on this rainy day in Boston. I hope the weather is acceptable where you are. We'll have to accept it as it is. Please feel free to put in the chat where you're joining us from. My name is Miriam Diamond. I'm the program director of the Encore Boston Network. As many of you know, we help people 50 and over make a difference through work, service, and social action. And today our focus is going to be work. You can learn a lot more about our organization through our website, encorebostonnetwork.org. And we're the website where you signed up. So you already have us probably in your memory somewhere in your history. You can check out other events. This is part of a series about the new world of work. So feel free to check out our other events, sign up for our newsletter, and feel free to join us, which is free. And how many things in life are free? Just want to let you know this program is being recorded, and sometime next week we'll send you a recording of this with a list of the resources and anything else anything else our wonderful panelists would like to share with you. So if there's something you missed, if you want to hear it again, if you know someone else who isn't here that you think should hear this, feel free to let them know and you can share it with them. We encourage you to send your comments and any reactions and any questions in the chat through the whole program. It will help if you write the word question before any questions so that we can identify it a little more quickly and we know it's not a comment or a reaction. And if it helps you to use the closed captioning, please turn that on. Today, our topic is the nuts and bolts of self-employment for people over 50. So we want to provide business setup information for anyone who has or is considering a freelance contract or consulting work gig. Our panelists will help you decide how and when to incorporate, what to include in a contract or work agreement, what records to keep, what taxes you need to pay, how to address insurance, and ways to save for retirement. All of that in 1 hour. So we're in for a lot of wisdom and information. Today's panelists are Bill Hulsey, who is the co-chair of SCORE and a SCORE mentor. He was formerly legal counsel for the Education Development Center at Northeastern University. We also have Ina Kiseleva, who is a CPA, MST, and senior manager of international tax for HBK CPAs. She's also founder of her own accounting firm, and she's also a workshop instructor at SCORE. And we also have Pat Belleul, MBA, CFP, who's an independent presenter and financial counselor at Goldman Sachs. She was previously a financial planner, career coach, and corporate executive. And they will be interviewed by Doug Dixon. Most of you know Doug. He's the chair, director, and founder of this organization, Encore Boston Network. Doug's experience includes consulting with professionals navigating career and life transitions. How appropriate. So now I'll turn things over to Doug.
Thanks, Miriam, and welcome to everybody this morning. As Miriam said, this is part of a larger series that focuses on the new world of work. And we know that there have been a lot of changes in the way that work is done. And the one that we want to address this morning has to do with the way in which work is actually accomplished. And fewer people are working for employers, that is in a salaried or wage and benefits position, where the employer takes responsibility for all of the things like benefits, all of the things like liability and taxes and so on. We're talking this morning about people who have decided to become independent of that structure and working on their own and in effect selling their services either to individuals or to businesses. So what that means is that rather than relying on an employer to take care of all of those other things that typically happen behind the scenes, that now they become your responsibility. And that's what we want to talk about this morning, to help you think about ways in which to address those various issues. One caveat before we begin, there's lots of variation in the kinds of businesses that people run themselves. I think it's important to think about as a self-employed individual that this actually is a business that you're running. It may be a less complex business than those that you might have been affiliated with previously, but it still requires attention to some of the same issues. But those issues can be very different depending on the kind of business that you run, the kind of clients that you have, and the kind of expertise that you're selling or providing. So we want to recognize those variations. The answers to the questions that we provide today are not a one-size-fits-all solution, but they should help you see how this may apply to your circumstances. And if your circumstances are different, then the way you implement the response may need to be different. While we'll be providing some general information, I think it's always helpful, and we'll reinforce this, I think, in where it particularly applies as we go along this morning, to have conversations with professionals who can take into account the specific issues that apply to your profession or to your situation personally. So with that, let's go to our panel, and I'll ask some questions initially, and we'll try to cover the topics that Miriam mentioned, but then it'll be your turn. So be thinking about the questions that you have, either based on something that someone has said or based on something that you have already come to today's program with. And you can enter those into the chat at any point. You don't have to wait until we're ready to ask the questions. So Bill, in a conversation that we had before our session today, you mentioned that a lot of what we're talking about today is about managing risk. Can you say more about that and how we can use that concept to guide our thinking?
Sure, thanks. And hello, everybody. Good morning. I hope the weather hasn't affected you too badly as it's passing through. Before I forget, let me mention, I put my contact information in there for you, but SCORE Boston has a very large consulting practice group, people who were consultants in a range of industries. And if any of you reach out to me, I'll put you in touch with a SCORE mentor, which is a free service that we provide to talk to somebody and maybe help you get your business off the ground or refine it. So
and if you're not from Boston, there's SCORE chapters all across the country.
They're all over the country, but you can connect with me and we can serve you or get you in the hands of the right chapter. Absolutely. So, you know, a lot of what lawyers think about is risk and preventing it or allocating it appropriately. And so that's when we were talking about this workshop or seminar today. I offered, you know, the panelists and Doug my thoughts of a kind of a three-legged stool of risk management, if you will. And there are really three pieces to that if you think about how you're attending to each of those, you're really going to be able to practice your particular consulting, your particular business without having to worry too much about that. So the three pieces are, first, having an entity, an LLC, some sort of entity in place other than being a solo practitioner, because that entity, certainly in Massachusetts, is there to have your liability for the actions of the business limited to the assets of the business. So people always say, what's the point? Or they're going to get through the entity and they're going to sue me personally. It's not actually the case. Massachusetts doesn't like to go through a well-managed entity to the individuals behind it. So for the relatively low fee of about $500, you can set yourself up as an LLC. And if you manage these other two pieces I'm going to talk about correctly, then your risk of personal liability really does drop dramatically. And in some fields, you don't have a huge risk, but I have a client who consults in the area of medical device design. So there's a fair amount of risk if you get some of those things wrong. The second piece is having insurance in place. Small business insurance is relatively cheap. It's a good way to have assets respond if you are ever sued or threatened with suit, because that's what the insurance is there for. And those assets are there of the insurance company so that you don't have to put your dollars in play to defend somebody. And then the third piece, which is whether you're serving your customer, your client, or whether you're hiring people as independent contractors or so on, is the terms of your contracts. So a lot of times when you're getting a contract from a customer, you'll see those clauses about indemnification or limitations of liability and so on. And we can't get too deeply into those, but the general purpose of those clauses are to allocate risk into the hands of the party who's best in the position to prevent that risk from occurring. So what you want to make sure of when you're dealing with a customer, for example, is they're not asking you to take on more risk than you're in the position to prevent. A lot of times a customer will want to turn you into their insurer by giving you an overbroad indemnification clause, and you want to stay away from those and know how to push back. And again, we may be able to talk about those a little more later, or if you have specific questions, you can always reach out to me, my email.
So Bill, let's go back to the question of entity and incorporation. You recommend that people do that. Are there situations where that is not required and not necessarily helpful? And then the other side of that question is where people do decide to incorporate, what's the best way to move forward? What are the steps they should take, and who should they look to for advice, or where should they look for advice?
We can always help you. There's some great onlines. I'll put in one. If you're in Massachusetts, if you just Google NOLO, which is an online legal provider, llc.com, Massachusetts, you'll get a great step-by-step, and I share it routinely. So there are a range of entities, and the entity that you form is really a conclusion of a couple of things. One is how many people are going to be in the entity, where your capital is going to come from, whether you anticipate in your business plan that you might be attracted to a VC firm down the road or something like that. But by far, let me back up a little, Doug, because you're right. You don't need to have an entity if you're still in the thinking stage. If you're not actually practicing your business, you don't really have any risk because you're not out in the field. And there are certainly people that are working in areas where even $500 is too much to spend, and they're not in a position where the kind of consulting they're doing is risky. You know, I have a client who does tarot readings and those kinds of things. And, you know, we talked and I said, you know, just put some disclaimers on your website and save that $500 for marketing and that kind of stuff. So there are certainly, risk is on a continuum. And if you're consulting in an area where clients are going to act on your expert advice, then you want to have that entity in front of you. And you want to make sure, again, that your contracts make clear that the liability is between your client and the entity and not you personally. So, and I think, you may be going to talk about this some, but I like the LLC because it's just simple. It gives you all the liability protection. It's flexible in terms of ways that you can bring capital into the organization. It can admit more members in different ways. It has a tax treatment of a partnership if you bring in more than one member, but it's not going to stump any accountant in terms of the way to do it. On the far end are people who set up C corporations. You know, there are times when those make sense if you want to issue shares, or if you think the entity might be acquired by a VC. But you know, you can always switch entities down the road if you need to. So to me, simple $500 if you think there's enough risk and you're in business, and take that LLC and put it there. There's no need to go to any state other than Massachusetts for any form of entity anymore. There was a time when Delaware was seen as the premier state for that because they had better developed case law and better, clearer statutes. But Massachusetts courts and the statutes are very sophisticated, and you don't need to do anything other than register here if you're in Massachusetts. If you're in a different state, we can talk about that. But certainly Massachusetts LLC as a baseline is all you need. So I'll stop there.
And Bill, you said you recommended NOLA. Can you?
NOLO.com. I'll type the link in for this.
Okay, good. That's helpful. There are templates for creating your own corporation online. People can do it themselves if they have enough expertise and experience.
It'll take you less than an hour.
Okay.
It's a very simple thing. You don't need to pay NOLO. They just have a great step-by-step. I've probably given the NOLO link to over 100 people.
So
and I've never heard
will help people. That link will help people
it's a very simple process. It's just type in a few things. The hardest part is letting go of the $500, I think.
So now one more question for you before we turn to Ina, and that is, you mentioned contracts.
Yeah.
And are there certain things that people, you mentioned indemnity clauses, are there certain things that people should be thinking about when they are both developing a contract or reviewing a contract that a client has offered?
Thanks. And you remind me, I put two names into my chat. One is mine, and the other one is a colleague of mine. We've worked on a series of templates of contracts with clients, contracts with subcontractors, and so on. So John Ballinger is his name, and you can reach out to him and say you came through our great seminar here, and he can work with you to give you some documents that you can use. Some of the terms, the way I like to break the contract out is to think about the scope of work, which is what you're most interested in, and really the client is typically most interested in. What are you going to do? What's your delivery schedule? When are you going to get paid? And you can use that as a set of bullets or whatever, and turn that into a document that's going to be something that you're going to attach to the legal boilerplate. So if I hire you to renovate my kitchen, there might be some boilerplate about indemnification and who's going to carry risk and a requirement that the vendor be bonded or what have you. But that scope of work is really what's going to define why you're hiring that person or they're hiring you. So within the legal thing, typically that's the part of the agreement that's allocating the risk, that's limiting the liability. And there's a broad spectrum, Doug, as you said, of how those can be addressed. So it's hard to get too specific, but typically the boilerplate part, the master services agreement, something like that, is going to identify the parties. It's going to identify the term of the agreement. It'll identify how long it will last. And then it will start to talk typically about risk, and then things that are even a little more inside the weeds, which is how are we going to resolve our disputes? Are we going to arbitrate? Are we going to limit ourselves to the courts of Massachusetts? All things that are important, but you want to just have a boilerplate agreement that specifies those things once, and then you don't hopefully negotiate those every time you get to a new customer or client, so that you can focus on delivering the service that you want to deliver and that they want to acquire.
Great. So we'll have a chance to come back to any of those topics if there are further questions, but let's now turn our attention to the exciting world of taxes and accounting. Ina, people who are self-employed are responsible for paying their own taxes. Of course, we pay our own taxes anyway, but these are taxes that an employer would otherwise take responsibility for, and keeping records in order to support, right, their tax filings, but also to support things like billing and that kind of thing. So is there a recommendation that you have focused now on the question of record keeping. Is there a way that you suggest that people think about how to keep records so they don't get caught down the line without the information they need to support the various functions that the business requires?
Yes, I have. Good morning, everyone, by the way, and my congratulations to you on deciding to make the step and go on your own and kind of be independent of and make their own decisions. I do suggest that perhaps a very good thing to have is open a separate bank account. Really important, and it helps a lot at the end of the day when you're trying to figure out what you paid for your business. If you don't have funds, for example, and you decide to use a credit card to fund at least some of the expenses, please keep a separate card, even if it's personal. Do not commingle your personal expenses paid with that credit card with business expenses. Completely separate bank account and credit card. One of the reasons for that, not only the ease of record keeping at the end of the day, but also if you commingle your personal assets with your business assets, IRS may look on it as a hobby, therefore disallowing any potential business losses in the first or second year of your operations, if that may happen. And basically, you won't be able to benefit from those. The other very important thing to kind of keep in mind is that usually you work from home. So you have your home office. And in order to get the deduction, it is very important to have a separate space that is dedicated to business. Maybe a separate room that does not have a TV where your whole family watches that TV at the end of the day or during the day. Because the only time you can get the home deduction, technically speaking, when you have that separate space. And also keep track of your expenses that you pay out of pocket, for home maintenance, home insurance, and real estate taxes, or mortgages. Usually you get 1098. If you pay rent, just add that all up. The other thing is that we tend to use our personal vehicle to go visit our clients and or run errands for business, and therefore nobody keeps I'm generalizing here. I keep records of those. It's very important to keep a journal and written records in order to get the deduction. The technology these days made it very easy. There are a number of apps that you can use and install on your phone. So the moment you sit in your car, the app turns on and starts tracking the mileage. All you need to do is just code it at the end of the day, whether it was business trip or it was personal trip. And at the end, you can run reports of what the total mileage was for the year and how much was of that business versus personal mileage. So those are very important if you want to take advantage of the deductions like home office and auto expenses. And again, create a separate account. It's not that expensive to go to the bank and just open a business bank account. That's gonna have all. I think those are the most important items. Of course, there are a lot more that you can do, but keep the receipts and everything if possible. But bank statements should provide sufficient support and for any expenses you have as well.
So, Ina, now to focus on the tax part of the question, employers pay the payroll tax, and they also pay FICA or Medicare and Social Security tax. How does one think about covering that responsibility if they're independent as a worker and nobody else is taking care of that for them now?
So let me just maybe summarize what usually happens if you're employed and you receive W-2. you get gross wages, and then you complete W-4, and that is a guide for your employer to how much taxes to withhold, in specifically income taxes to withhold from your pay. So at the end of the day, you get net pay, not gross pay, net of taxes. Plus, your employers usually pays half of the Social Security and Medicare. Employees are responsible for the other half, which is also withheld by your employer from your paycheck. When you're a self-employed individual, whether it's LLC or you're a sole proprietor, you usually are responsible yourself for 100% for self-employment tax, which is Social Security and Medicare. The current rate is 15.3%. But what happens is then you get a deduction for half of the self-employment tax you pay. Self-employment tax is not income tax. It's in addition to income tax. Just keep that in mind. So if you become profitable all of a sudden, make sure that when you pay your estimates, that also includes your self-employment tax. And I do strongly suggest as well that when you work with attorney or, let's say Bill, about how to create an entity, which entity to create, during that decision-making process, you also work with a tax specialist who in parallel can advise you whether what entity would be the best for you in your situation and for your business. Because LLCs are great, but as Bill mentioned, you may not need really LLC if you're a fortune teller, and you can operate a sole proprietor to save you $500. But at the same time, you might have a venture that LLC may not work, if it should be C Corp, or you want an S Corp, and the accountant will be able to tell you what is the difference between each type of entity to have you make the educated decision when you work with your attorney as well. Other taxes that you should consider, is sales and use tax and personal property tax that you usually pay in your municipality. And also, if you decide to hire someone as an employee, you will be responsible for taking care of payroll as well.
But that would not be true if you hire someone as a freelance or as a partner, where there isn't an employment relationship in place. Is that
That's correct? I mean, if you decide not to keep them as employer, then they're going to be independent contractor. They have to meet certain requirements, though. And
Right.
I suggest that you also explore irs.gov. There's plenty of information for small business owners on self-employment tax, what independent contractor is, because independent contractors need to meet certain requirements to be independent contractors. If they don't meet those requirements, they have to be employees on the payroll.
Right. And that can be very tricky ground, and it can change a little bit from state to state. There are different rules in place.
It's not even state to state. It's really federal law. It's not a law. It's really kind of arbitrary decision that you have to make. Like, for example, do you keep their schedule? Do you actually tell them what to do and how to do it? Do you tell them when to come to work and when they can leave? Things like this. Did they use their own instruments, or you provide instruments to them? So all of this facts, right, determine whether it's really an employee or not.
So one more quick question before we turn to Pat, and that is, sometimes people have clients in different states or in different countries, and the taxes may be different in those jurisdictions. How do you recommend that people think about, and I guess this gets back in part to the record-keeping question as well, engaging professionals who can help them with those particular kinds of issues?
Well, again, I'm gonna kind of say that it is really important to work with a tax advisor to understand probably multi-state taxation, especially if you yourself live between 2 states or 3 states, you know, let's say you have home in Massachusetts or in New England somewhere, and then you have home in Florida. A lot of New Englanders, you know, go to Florida for the winter, for example. So if you work while living in Florida or in Massachusetts, that may depend whether you have to file and how you have to file, and where you could where you are considered to be a resident of which state. It also may depend if you go to visit your client and do work from client's office, if your client is located outside of state. Basically, there is a concept of the nexus that you need to create, right? And if it's created, then you're technically required to file in that state. And Massachusetts actually apportions sales based on market. It's called market-based apportionment. It's not where you're present to provide the services, but where your client is located. That's how sales or services are usually allocated to the states where your clients are located. But again, this is a very complex question, and I'm glad you asked this question, because you see it more and more often. This world is without borders anymore when it comes to business. So it's really important to consult your tax advisor on this.
Good. Thank you, Aina. Let's turn to retirement savings. Pat, employers provide 401k plans and other ways to create savings that are tax advantaged. Are those options also available to self-employed individuals?
In some sense they are, but if you think about this particular group that's on the call today, there are people all over the map. There are people who are married to spouses who have high incomes. There are people whose retirement is taken care of. But for most people, the two simplest things to do for retirement savings are the old traditional IRA. The old IRA, the one that started it all, has a $7,000 income limit. And for most people, when you invest $7,000 in your IRA, it's tax, you get the tax benefit immediately. So one thing to think about is, do I plan to have a higher income now than I do in retirement? And that's true for most people. In other words, most people have their highest income later in their career, and then it drops off in retirement. 85% of your Social Security will likely be taxed, plus any earnings on your savings, plus anything you take out of an IRA or a 401k. So the traditional IRA gives you $7,000. The other thing that is most frequently used by people in their own business is a SEP IRA, a simplified employee pension. So if you're working on your own, setting one of these up is easy, and you can defer a portion of your income, and the maximum is much higher. It's over $60,000 this year. We frankly don't know what those numbers are going to be in 2023 because they haven't been announced yet. But we assume they're going to be higher. But in either case, if you're beginning your business and you're eligible for it, doing a traditional IRA makes sense. It's got to be less than your total income. If you've been consulting for a while and you have a higher income, setting up a SEP, a simplified employee pension for yourself, makes sense and allows you to defer a lot more income now, and you will pay taxes on it later. The other piece of it is, if you're willing to save money after tax, of course, you have all the usual vehicles that you have for savings, whether it's a CD or a brokerage account. But you could also, within income limits, which are on the IRS website, you could do a Roth IRA. And the benefit of a Roth IRA, which has a limit of $7,000 per year for people over 50 right now, is that you put the money in, you get no tax benefit at all. But when you take it out, both the principal and the interest are completely tax-free. It's a great vehicle if it's the right thing for you. So if you have a financial advisor, this is something that's worth talking about. And if you don't, we'll talk about some alternatives. But the vehicles are out there and they're pretty generous.
Good. So there are some people who are working later in life and already collecting Social Security,
Right.
but there are some limits as to how much people can earn. How do people manage that situation?
Well, depending on your age, if you're 62 and you've taken Social Security, the first thing I would tell you is give it back, suspend it, stop taking Social Security. When I was a planner, we did everything we could to get people to take Social Security as late as possible, assuming that they were healthy and plan to live past 80, because the break even on almost any Social Security scenario is under 80. So if you're taking Social Security and you're under 67 and you can get along without it, actually, if you're under 70, you can suspend it. And every month that it's suspended, the amount you're entitled to goes up by your age. So keep that in mind. Social Security is much more complicated than it should be. I met with somebody the other day who's 63 and has literally no income at all. They're in public housing, they're on Medicaid. They're taking Social Security because it will be the only income they have. If you can defer it, the longer you can defer it, the better. If you're already taking it and you can get along without it because you have an employed spouse or because your consulting income is now enough for you to live on, suspend it. It will serve you well in the long run to take security as late as you possibly can, but not past 70, because it doesn't increase after you're 70. And beginning at 67, you can make as much as you want and keep all of your Social Security. You don't give any back.
Great, thank you. And we're going to hold it there because there are lots of questions and we want to make certain that we have time to get to all of the questions. And by the way, now's the time. If you have a question, you haven't already put it into the chat, now's the time to do it. And as Miriam suggested, please put in question first so we can distinguish the questions from the comments. And there are a lot of good comments, a lot of good references and so on in the chat. So be sure to take a look there. So Jim says that he's a management consulting, and one of the issues he faces is collecting from clients. And he prefers to get money up front, partly for that reason, because chasing payment is not fun. So he says he's choosing his clients based on their reputation and ease of payment. And the question he's asking is, do you have a recommendation about invoice services vendors?
I mean, I really don't have any invoice services, collection agency advisors or, references, but I may suggest that, and at least in the accounting industry, for some clients and for some type of services, when we issue an engagement letter or contract, that we call it engagement letter in accounting industry, we sometimes ask for a retainer, which is due when a client signs the engagement letter. I don't know what Bill's take on that.
I just think you have to hold the line. I mean, I think these services that will collect for you are going to take a sizable chunk a lot of the time. So, you've already lost your advantage. But, it's funny. I was telling somebody the other day, it was this guy that does medical device advising. And I said, you just got to walk away from some contracts that if the terms don't make sense. There's always somebody that'll sell cheaper or whatever, but your business model has to be based on how you want to get paid. And, there may be a time here or there, but you're already at a disadvantage typically because you're a sole practitioner and your company's hiring you and they want to lean on you, but you just got to stand up for it. And what Ina said is just right. Get those payments staged in a way that you're never too far ahead of your cost of labor or whatever you're delivering. And just stick with it and be prepared in your contracts to say, look, I'm gonna, if you fall behind on your billing, I'm going to suspend service.
Yeah.
And if people have, I'm sorry, go ahead, Bill.
No, please.
Pat, were you going to say something? I'm sorry.
No, I just agree. It's a staged billing process and you have to be willing to stop working. That's the hard part.
Yeah.
And I think the other thing that goes with this is that, and this is hard, I know, for a lot of people who are, who do work that they love because that's what they want to be doing, not the back office things, right? Not the taxes, not the record keeping, not the chasing of invoices. But, I think it's important for people to think about setting aside a morning a week or a certain time that they devote to these kinds of activities so that they don't go unattended. Because when that happens, the further behind you fall, the worse the situation.
One clause, Doug, let me add one thing. First, if you're working for a governmental entity, you're probably not going to get paid when you want. I think that's a reality, the school district or whatever. The other one, though, is don't let your customer predicate paying you on when they get paid. If you're a sub to a sub, so to speak, or there's a client further upstream, they'll want to say, well, we'll pay you within 30 days when we get paid. And you just have to say, no, my agreement's with you. And so watch out for that clause. Sorry.
Great. Karen is asking about health insurance, and that's not something that we've talked a lot about yet. But her specific question is, she's insured through a former employer, which means that she's paying out of pocket for a monthly premium. Can she deduct that premium on her taxes? And she's saying they're not paid with the pre-tax dollars. That sounds like a question for you.
So if you are self-employed now and you went through COBRA through your former employer, those payments, yes, can be deducted because you're going to have Schedule C, and payments can be deducted not on Schedule A. There's a limitation on Schedule A, but on actual Form 1040 Schedule, I believe 1 or 2. I don't remember which schedule it is right now, sorry. But it's definitely more preferential when you're a business owner to deduct health insurance cost premiums and dental insurance premiums on the front of the tax return.
Okay.
One other thing, COBRA is 102% typically of what the employer pays. So at least check with the connector and make sure that there isn't something that works just as well for you and is cheaper. Because it's out there, and until you turn 65 and are eligible for Medicare, you're going to have to insure yourself.
Yeah.
So the connector
Plus,
Pat is
I'm sorry
referring.
to interrupt. Plus, you're making most likely much less money right now. So you may qualify for different connector or other programs that will reduce your premiums. It depends, of course, on the type of health insurance you need, whether it's family plan or, 1+2, whatever. Even talking to other agents that sell health insurance may help.
So the connector that both Ina and Pat are referring to, for those of you who may be out of state or in state in Massachusetts and not know about this, the Health Connector is a place where you can purchase insurance as an individual or for your family as well, but outside of a group, an employment group situation. And there are lots of different options at different coverage and price points. And there also is the national now with Obamacare, there's the opportunity nationally to purchase insurance outside of the employer group system as well.
I
Yeah.
also want to add quickly on insurance. If you go with the high deductible plan, you can actually create your own HSA plan, which is health savings account. And it's a really great tool to pay for any out-of-pocket expenses. But if you don't use all of it, that can be carried forward and used in retirement if you don't use it, on a current year basis. So it's kind of like another almost IRA type of a deferral. But that's just wanted to mention it. It's worth exploring.
Good. Okay, and we have a question. Miriam says, do we set up SEP IRAs at the same place where we set up on a regular, I'm sorry, on the same, at the same places where we set up a regular or Roth IRA? Do I need documentation to prove that I'm self-employed? And are there Roth SEP IRAs? So Pat, you're on.
I'm on it. And frankly, I don't know if there's a Roth SEP IRA. I don't think there is. But one of the things I was going to suggest to people who don't have an advisor is Fidelity is a local company. It's very cheap and they have advisors. If you're thinking of setting up a SEP, it's worth setting up an appointment with an advisor. Bring someone along, because while you're talking to the advisor, you want somebody listening and knowing exactly what's happening. And don't commit at the meeting. Go home and talk it over and decide what you want to do. But unless you have an advisor, and I don't even have an account at Fidelity, but I've taken people there and talked to them. They're very knowledgeable and they're local. So think about doing that. The only reason you want to do a SEP IRA is if you want to do more than $7,000 and you want to know about any restrictions based on your personal circumstances. And every one of you has different personal circumstances.
I just want to add to that because there's also another plan. It's called Solo 401k plan.
Yes.
And it also is available as a Roth, so 401k plan.
Yeah. There are
You said a solo one?
Solo 401k.
Solo
Yeah.
401. Okay.
Yeah,
Okay.
there's a simple plan and there's a solo 401k plan. And both of them, I would talk with an advisor first.
And I think the advice about bringing somebody else with you is true for every kind of professional
Yes.
discussion, right? Because you're busy thinking about, what they've said about your circumstances and the next question, and you don't always hear everything. What I've also, by the way, and this is a little bit off the point, but I think it's a helpful suggestion. What I've also heard, and many professionals are perfectly fine with this, is people recording the conversation so that they can go back to it and be sure that they caught everything. Pat, what should people, we're talking about retirement savings, but there's also a question here about, particularly for people who are going into a business where they need to make some investment in in space or equipment or in some other way. What about preserving assets and thinking ahead to an eventual retirement? Do you have recommendations for?
Well, in terms of preserving assets is really a legal question. And it typically has to do with putting assets in trust. And it sometimes means losing 100% control of them. So on the preserving assets piece, I would really defer to a lawyer. If you have things you do not want people to have access to. The discussion about an LLC, I think, was important there because you can't go beyond a certain level. But other than that, if you have enough income to continue saving and investing, that's worth doing. All the expenses you're talking about, Doug, the the rent and the phones and the internet, the things that go along with having a business, those are typically deductible, and it's only your net income that is eligible to be invested in any kind of retirement savings. Does that make sense?
Mhm.
Yeah.
And is there anything in particular that self-employed individuals need to be thinking about that might be different as independent workers than those who are otherwise employed?
I think the main thing they need to be thinking about is what their net income is and how much of that they want to preserve from being taxed immediately. You know, on the phone call, we probably have people who have a small business where they're making $20,000 a year, and people who are making a multiple of that. Particularly for high income individuals, you want to defer as much income as possible, because everybody thinks they know what their retirement date is, but frankly, none of us does. You know, we may work a lot longer, we may be forced to retire a lot sooner. And the more deferred savings you have, the more income you're going to have to draw on in retirement.
So we're nearing the end of our time together. Bill, based on the things that we've talked about, what do you have a final comment or a thought or something you want to leave the group with today? You're muted.
Probably won't
There you
have
go.
any difference in terms of the impact of what I have to say. I would just echo what Pat and Ina has said, which is, you know, use a professional. I think the other day when we were talking, we talked about, I think some people call it the RICE team or something, but as you're building your business model, build in the costs of having an accountant, a lawyer. You're not going to need them very much, but you'll build those prices in and rely on those professionals to get you on the best footing for whatever issue that you're dealing with. So I would just encourage you to do that. SCORE can do some stuff, but we can't be your lawyer, we can't be your accountant, but we can help you. So that's what I would say.
And would you also add that you know, not every lawyer can be equally useful, that you should be certain to work with, and this I think is true for all professionals who have experience working with independent, self-employed, small businesses.
Absolutely. And don't, you know, unfortunately, lawyers aren't cheap, except for cheap lawyers. So I always say I don't buy cheap shoes, and so my shoes last a long time. And it's true for lawyers. So you'll get a much better advice if you find somebody who's an expert in the field that you need. It'll be more succinct, it'll be clear, and you can count on it.
Ina, any last words of advice?
I mean, I concur with Bill on everything he just mentioned. Yeah, budget for your cost of professionals that you need advice from ahead of time. Call them ahead of time and ask, you know, explain what your business is, what the potential fees may be. Accountants usually charge additional fees for any advice they give. Tax preparation is a separate service. And usually actually tax advice is more expensive than tax preparation services. Just keep that in mind. Just so there are no surprises at the end of the day.
Yeah.
Great. And Pat?
Yeah, I would say make sure you know all the services that are free or low cost for small businesses. SCORE is a great place to start. You know, get what you can initially. There may even be referrals possible, so that you know that you start at a very low level, but then you have good advisors going forward.
Great. And lots of good resources mentioned today, and we'll include those in the wrap-up that we send along next week. I want to thank Bill and Pat and Ina for their expertise, the time that they've taken to answer our questions today. And Miriam, over to you.
Okay, well, I will echo that thank you, and also to you, Doug, for moderating this discussion. Lots of rich information. As Bill did, I encourage, if possible, Pat and Ina, if you have websites or email addresses that you're willing to share, if you could pop those in the chat, and we will include those also in our follow-up. And if people do email any of our panelists, please indicate where you heard them. So you could say that you heard them in Encore Boston Network at our program for self-employed individuals. In the meantime, I would like to thank all of you participants, and feel free to let us know what you learned from today's program. If there's a next step or a couple of next steps, feel free to pop that in the chat. We'd love to know what you gained from this. Also, any suggestions, comments, ideas for future programs. I'm always looking for new ideas. We always are. We said earlier the session has been recorded, so you'll be able to see it again and also share it. As Doug said, we will give you the links and any other information that we can provide. Please stay tuned. Look at our website. We have a lot of wonderful programs coming up, more about workplaces today. We have something coming up next week on identifying your special strengths and how to use them. We have another program coming up on how to find the work you love through speed dating, and that's including networking. So those of you who have your own businesses, that's really important. We have an age-friendly employer forum for those of you who might be thinking about self-employment and maybe part-time or on the side while you're working for a company. So you can come to that on November 2nd, and many, many other programs coming up. If you're interested in social justice, as we're heading into our election cycle, we have something coming up on October 6th on protecting voter rights. So please look at our EncoreBostonNetwork.org website. Join us. It's free. We always have job information and work information, as well as other information for making your life easier. And again, I want to thank you all and wish you success in your decisions and endeavors.
Thank you.